Welcome to the program, Colin. It's a big week. It's the end of metals week here in London. Let's start out by asking you your opinion on which way commodity prices are headed. Have we seen the worst of their fall?
I think the dramatic falls we've seen over the past month or so have been the biggest you'll see for a while, and people have been looking for this relief rally. Obviously the focus was on macroeconomic information, and we've seen with the coordinated response we had yesterday, people are now feeling, well, commodities are coming back to fair value. Many of them were trading into the cost curve over the past month.
But for how long? Because these macro situations are nowhere near being solved, especially if you look at the European debt crisis.
Certainly, and that's just moving demand down the road again. I would say the bigger concern for us actually is China in the short term. Certainly we're seeing a slowdown in the pace of growth from China. China's a much bigger factor for commodity demand globally.
This is the big concern for commodities. So how much is China slowing down?
Certainly, we're seeing the rocks of commodity demand this year being the Chinese construction sector. It's surprised on the upside again. Now we're starting to see what's likely to be a slowdown in new starts. Now, it's hard to quantify exactly how much that slowdown will be, and you should never underestimate the Chinese government's ability to turn things round. But in the near term, we do expect to see those growth rates move back to sub 8% that the Chinese government normally
aim for. What if the rest of the world gets worse than you think it's going to be? China obviously is still very linked.
Well, yes, absolutely, and there's certainly no decoupling there. You would expect commodity prices to take another leg down. That does create the opportunity for China to refuel its growth without worrying about the same inflationary pressures. At the moment, inflation is still the big concern in China.
I just want to look at some of these conclusions to a survey that you guys did at LME Week. Pretty interesting stuff. I mean, you had the same amount of investors roughly betting on, saying that copper was their favorite short trade, and the same amount saying it was their favorite long trade over the next 12 months. That kind of shows you that people don't really know what's going to happen.
That's exactly it. Copper is always in these surveys the favorite long, but this time around 30% saying it's their favorite short as well. Now that just highlights the confusion in the market, as certainly you have physical market participants who think, well, things are not bad yet, and we think copper will rebound. You have financial market participants who are still very worried about the status of future demand.
So what you're saying is that you see a refocusing, or you expect a refocusing on the fundamentals, on the demand side of things. But you say that, and then at the same time, the survey that you guys did also showed a split result on what people expect in terms of how much demand is going to grow next year.
Yeah, I think that there's a general expectation that demand growth will be slower. It's just whether it will be markedly slower, particularly in areas like China, and that is such a key driver for these commodities. Now,
there are still 32% though that think that metal demand is actually going to contract.
Yes, that would be quite unusual. For that to happen, we would have to see China really slow down, really keep on the brakes. Now, if China is going to grow anything like 6 to 8% GDP next year, that's going to be metals intensive. History will tell you that has to be higher commodity demand. It's just how aggressive the Chinese buying will be in the market.
What's the overall conclusion? What's the main takeaway after this gathering here in London?
The main takeaway, I think there's still uncertainty out there in the markets, and certainly for physical market participants, that means they're destocking. They're wanting to hold less inventory, less working capital, because there's a nervousness as to what 3 months down the line might hold. I think there's still belief in the commodity fundamental story, but the macroeconomic headwinds are still going to drive sentiment in the near term.
That's the driver at the moment, but then next year you still see this. You see this return to looking at the fundamental situation.
I think fundamentals always do kick in, but I think, as I say, sentiment can move commodity prices in the short term. Fundamentals still set the fair value. At the moment, we're seeing some supply under pressure in some of these commodities. You will see a supply response, and that will bring metals back out the cost curve.
I'm just curious to know which ones. Where's the money to be made in the commodities sector?
If you were thinking that suddenly the Chinese government is changing policy and loosening, then people will be refocused on copper. Certainly in the near term, though, the safer bets are I would say, in places like thermal coal. Thermal coal is a much more strategic commodity for China, and that is an area where they will be sending signals out to their power stations to go out and make sure you've got enough coal for the winter months, and that's the safest place to be at the moment.
Thermal coal. Colin Hamilton, analyst at Macquarie Securities. Thanks very much
Thank you
for helping us out.